Hi there. In this video, I want to share with you a new position I entered into yesterday. Today is the 16th of the month, 9 o'clock in the morning. So yesterday, seeing that there was a massive pullback in the SPX, I looked for securities that are on the verge of breaking out. Essentially, there was a significant retraction based on the Fed announcement. The Fed announced that it would not only continue to purchase bond ETFs, but also individual corporate bonds. The market rebounded from a -3% to above +1%. So that was quite a significant bounce. Essentially, this is how yesterday looked. Just out of curiosity, if we check how many points we covered, it's quite a lot. From the opening we moved, let's say to the top, 113 points, and we closed at +100 points, which is incredibly strong compared to where the market opened. But that's not the main point right now. In CRM, I selected a calendar spread targeting 195, which is around the previous peak. I was looking at which one I could get the cheapest, and this one looked really cheap. I managed to buy it for 0.30 in a quantity divisible by 5. The expiration dates are July 2nd and July 10th. I didn't leave any space in between because I'm playing it short term, and I wanted to get this done cheaply, but with high profit potential. This position has a substantial risk reward if it climbs back up. There's still time left, as July 2nd is 16 days away. Ideally, it would climb back to around 195 by July 2nd. Then, for the example's risk of $150, you could easily make $400, $600. So this is a shorter-term play, a bounce-back game, using a relatively cheap calendar spread. So that's how the position looks right now. Oh, let me show you the fill. Sorry, almost forgot. The position filled yesterday at 0.30. So this position is already in play, and I'll be continuing from here. Back again, and I've closed out part of the position. Out of the quantity divisible by 5, I've closed 3 contracts at 0.60, effectively making this position risk-free. In the last 15 minutes or so, the market made quite a drastic move. We essentially dipped down here in an instant. Of course, this was a gap fill, but I reviewed the positions to see where I might reduce risk in case the market gets hammered again. Powell is speaking today and tomorrow, and we saw the impact of his last speech, so it's very possible that we could drop back down to this level, depending on what Powell has to say. The market is a bit news-driven right now, so I decided to lock in the risk portion of this trade. It has doubled, so I can easily pocket more than half, making it essentially risk-free. Here's the fill, at 5:16 p.m., and it's currently 5:20 p.m., filled at 0.60. There was no rolling. There's no difference in expiration between the two. So essentially, I can't lose more than $30 on this now. The upside potential is still very much intact until July 2nd. This could easily rally to 195, but I'm not risking anything anymore. So, in this example, the position looks like this. It's a bit parked because it dulled the delta, theta, and vega, but it's already in a decent profit, so I've locked that in. With this adjustment, the whole thing has been made risk-free, and I'll continue from here. All right, back to this position, where I made some adjustments today. Specifically, I exited one of the remaining 2 positions for a $1 credit. Here's the screenshot. At 6:30, 195 strike for July 2nd and July 10th, executed at a $1 credit. So, from the initial 5 positions, only 1 is left open, and it will expire on July 2nd. The reason I partly exited the position is that I saw this spike up, and then we pulled back, and the SPX is also quite bearish today. Therefore, I thought, given that it made a new high the previous day, and today we have a red candle, it could go either way. It depends on what SPX does next week. We might test this level and go higher, or we could go back to around 2980. If that happens, this CRM position wouldn't be too strong. It might drop back to 177, where it broke out from. Since there's not much time left until July 2nd, which is a Thursday, because Friday, July 3rd is a holiday due to the July 4th celebration, and the markets will be closed. I decided to do a bit more scaling out. If I hadn't scaled out initially, the position would be in a $360 profit, but now it's just a $230 floating gain, as I scaled out at double the price to reduce the risk. So now, I'm looking at what I could potentially sell it for. Right now it's at $1.05. If we go up a bit next week, We could even exit at $1.50. Initially, the risk was 5x30, which is 150, and now there's a 235 profit on it, which is already ideal for a calendar spread. Worst case scenario, I'll make about 130 on it, so almost a 100% profit is locked in. I'm going to wait to sell the last batch. It might be next week or the week after, we'll see. Or I might not sell at all if we open at around 175 on Monday. Who knows? The SPX has been so volatile recently that my trading style fits well with being conservative and managing risks through adjustments rather than building on the positions. A more aggressive trader might say, "Oh, there's a pullback in SPX, let's buy here and hope it goes up." Sure, it might go up. But given the multitude of factors currently driving the market, predicting its direction for the next week is challenging. So I decided to lock in some more profits. As of now, it's at $1.16. We'll continue from here and see how it closes. Alright, back again. Today is June 26th. It's 8:30 in the evening. And even though there was still a week left for this position, I closed it out today for a credit of $1.10 on the last batch. So, in this position, I managed to realize a profit of $240. Here's the moment of closing. You can see that I closed it at 4:14 p.m. today for a $1.10 credit. There were multiple reasons for the close. One reason is that the market took a pretty ugly downturn today, along with CRM, and I don't have much faith in this 195 level holding until next Friday. You see, it's around this new peak, or well, around the double top area, and next to that, SPX also had a pretty bad downturn. We opened with a gap down, and it's been falling continuously since then. Right now, we're seeing some significant base building happening. The question is whether it will break out upwards from this flag formation, or continue downwards. Based on this, I think we will test this level down here, around the 2970 mark, and where it goes from there is a very good question. However, I think this whole thing won't happen within a week, and if we keep falling and trading sideways for a week, that's not ideal for this position. It can slowly drain down, and I might lose a significant portion of the accumulated profit. Since the position has been adjusted multiple times, it wouldn't have been a total loss. I would still pocket $130. But this way, I'm taking home $240 in profit. So, I didn't want to wait any longer, as this setup doesn't seem too positive to me. So I closed it out a week before expiration with $240 in profit. And you can see here that all that happened was an initial risk nullification, followed by a bit of scale out, and today was the final scale out. So I hope this position entry was useful. If you have any questions, feel free to reach out. Thank you for your attention. Bye.